In my video yesterday, I was talking about how we had an ascending triangle here on the hourly chart, and that this has about a 64% chance of breaking to the upside. Obviously, I was wrong on this one, and it didn't play out to the upside. It decided to take the path of the 46% that it could break to the downside, and it broke to the downside. But I was also talking about how we had this bearish divergence here, which you can see on the daily chart a little bit better. And I was hoping that that rising triangle was going to break us out to the upside and nullify this bearish divergence, but it didn't do that. And because I ignored this bearish divergence, obviously I turned out to be wrong, and now we have dipped down below 24,000 again. So it looks like this could be the beginning of a more significant retracement, and like I've said in a lot of my previous videos, it is pretty normal for us to retrace about 20% in the middle of a bull trend. We haven't had a really good pullback here since we started to pump at the bottom of this market, and it looks like we could come back down here to revisit some of these daily moving averages. I've been talking about this 200-day moving average, which we didn't come back down to turn into support, and I think that we could actually do that, bringing us back down to about $20,000. Hopefully we won't break below that level there, and we will actually end up making a higher low here. And as long as we continue making higher lows and higher highs, then I'm not really worried about it. And I do expect significant pullbacks of up to about 25 or 30% even in the middle of an upward trend. This will be significant enough to probably shake a lot of people out of the market and convince them that this was a bull trap. And as soon as people decide that that was the case and they capitulate, then we're going to see a bounce and we're going to end up going back to the upside again. One big catalyst that could be causing us to go to the downside today is that the Fed minutes were actually released just a few minutes ago at the time of recording. This article by CNBC says that the Fed minutes show members were resolved to keep fighting inflation. While the February 1st meeting concluded with the similar rate hike to most of those implemented since early 2022, officials stressed that their concern over inflation is high. Inflation remained well above the 2% target, the minutes said. That came with labor markets that remained very tight and contributed to continuing upward pressure on wages and prices.
Let's go now to Steve Leisman in Washington for the Fed minutes. Steve.
Almost all participants at the last January meeting for the Federal Reserve agreed on the 25 basis point rate hike. Ongoing rate increases were seen as appropriate by all members of the participants in the Federal Market Committee. 25 basis point hikes were seen as allowing the Fed to assess the economy and the impact of rate hikes as they went along. However, a few wanted to raise by 50 basis points.
So it looks like they're continuing to see inflation as a problem that is persistent, and they think that raising by 25 basis points is actually just slowing down and almost even doing a pause so that they can let the data catch up. If inflation continues to run high and they don't actually do a pause, then we definitely could see some more downward momentum in the stock market, and that could bleed over into crypto. As a matter of fact, I was looking at this historical chart for the S&P 500 that goes back all the way into the 1800s, and right now we actually do have a huge bearish divergence here for the RSI, which you can see here indicated by these light blue lines. There's only been a couple of times in the past where we saw a bearish divergence like this, with one of those times being leading up to the 2008 financial crisis, another one being back in the 70s whenever there was obviously the Paul Volcker era and all of the financial turmoil that we were seeing back in those days. And really that's it, because it looks like we didn't really have enough data to actually have a full real graph here back in before the Great Depression. And I guess that's probably because people were just handing around pieces of paper by hand and delivering stock picks on horseback. But even though we didn't have a bearish divergence on the RSI, it was one of the only other times that we got as overbought as we have been in the past few years and right before the 2008 financial crisis as well. So if history is any indicator, it looks like we're probably not done with the pain here yet. And unfortunately, we might have to continue seeing this bearish divergence here play out for the S&P 500. Hopefully, though, this will lead Bitcoin and cryptocurrency markets to do a decoupling, because as I've said in the past, people are going to be looking for alternative investments where their money isn't being crushed by bad earnings due to the stock market going down. If we do head into a severe recession or possibly even a depression, then the stock market is going to continue to suffer. And as the economy collapses, the world is going to be looking for alternative investments. Bitcoin has never been around during a real recession, and supposedly that's why Satoshi Nakamoto made it, was so that we could escape the next recession and the traditional financial system that the government just keeps manipulating. This is exactly the kind of scenario that Satoshi supposedly made it for, so if it actually is going to work out for what it was made to do, then hopefully this is going to be the time for it to shine, and we'll see that decoupling start to happen soon. In the meantime, though, I think we're going to continue seeing inflation be a real problem, and the markets are going to continue looking to the Fed to see what to do. So in the short term, we could see most of the volatility be based around the Fed's decisions, but in the long run, there's not really anything that they can do to stop this train from crashing into the wall anyway. Let me know what you guys think in the comments. Is Bitcoin ever actually going to decouple from the stock market, or are we all going to crash to the bottom together? Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you next time. Bye. Oh my goodness. You're so excited. What is that? Lay down. Come on. No, oh, you got it. You're so slick. You're funny, dude. Come on. Do it. What is it? Lay down, bud. Yeah, good boy. Come on. Bring it to me. Yeah, good boy. Yeah. Oh, tear him up, bud. Yeah, good boy. Oh, hey, I was just being chased by a bear. Watch out. Don't forget to hit that subscribe button and that notification bell too, because I don't want you to miss out on any important updates. And check out this video. Oh crap, I gotta get out of here.